Hello, traders. She told me she was going to scalp, and I was like, when? She's like, when New York opens. I said, all right, let's do it. She's like, what? Traders.
Hi, how are you?
Hi, good evening. How are you, traders?
Oh, great.
All right, awesome. Thanks for joining.
Hey, hey Anna.
Good morning. Good evening. I
Good
was going to say
afternoon.
good morning. How you guys doing?
I'm doing good. Good. Uh,
Doing well.
Yeah? Anything new you guys want to share with your trading?
no.
I
No.
don't have anything new, just still. This weekend, I kind of just studied market structure. I feel like if I can really understand that better, it'll help me be able to enter and exit trades.
Okay. Yeah, absolutely. All right. Well, welcome. Today is Sunday, 9/15/2024, and this is our co-ed class platform success group. We meet every Sundays. And today should be a pretty fun topics. What we talk about in this group is to help traders who are already funded, looking to get funded, or maybe add on to their funding. A community of traders being able to help one another with their journey in the prop firm arena. So I'm going to go ahead and just go through the slideshow. And then here's just a quick legal disclaimer. And then today we are going to talk about after being funded. Woohoo! So some topics to think about, and we'll get into that. And then we're going to have another few other topics that we'll talk about. But just digging right into this. So what all does that mean? Let's talk about what after being funded. What are some strategies? So strategies for scalping up after funding, techniques for safely increasing position sizes and risk after achieving funding. So there was a whole bunch of material there when I was doing my research on, getting some good information for you guys. And this was really stuck out to me. So 8 effective strategies for scaling up after achieving funding. Go through these. The first one is gradual position size increase. And, even if this is for after your funding, but you can do this now as a benchmark on your current trading plan that you have for the week. And maybe you can go ahead and just try it now and see how, okay, doing it now, then after funding, it will work even better. And then maybe you might ask yourself, well, I'm already kind of doing this, and hey, how about it? Further research that Anna's done is returning results that I'm already thinking about or I'm already doing. So that will just give you more confirmation that you're on the right page. So how exciting is that? All right, so the first one is gradual position size increase. Start small. After securing funding, gradually increase position size by a small percentage, such as 5 to 10% instead of making large jumps. Now, when I read that, traders, I was like, that's kind of common sense. We know that. But it gets deeper, so just follow along with me. Track performance. Monitor how the larger positions affect your trading psychology and results before increasing further. Any of you traders have a story on that? On the trading psychology of using larger size, and then even though you're following your plan, the profits are increasingly big, and you're like, wow, goodness, I'm not even supposed to close my trade, but I'm already $1,000, maybe $1,000, $1,500 in profit. I'm happy with that. Let me just close my trade. Am I sharing my screen? Do you guys see the
Yes.
PowerPoint?
Yeah.
Okay.
Yes, we
I'm
see
just
it.
thinking, um, yeah, because sometimes when you use a larger position and you lose, it's just like, ugh. you know, because
Yes,
I've bought
yes.
accounts too before,
Yeah,
and it was a result of scaling too soon, or scaling more, you know, than the 5 or 10% what you're recommending, and you know, by starting small, and then it just kind of bums you out. It was just like, so yeah,
yeah,
psychologically it can be negative.
yeah.
Yes,
I
ma'am.
know. How about you, Missy? Any thoughts?
I've definitely struggled with that. And I've talked about it before.
Yeah,
Um, with different sizes of accounts, if you're going by a percentage rule, 3%, but the dollar amount is going to look different from $1,000 to 10,000 to 50,000,
yep.
So for me, I've been struggling with the loss. It's not even the gain, it's the loss. But I know that I have to detach and think of it more like math than like money.
Mm-hmm. Yeah, exactly. I remember even with it being a small size, using a small size, and holding a pullback, and it was like maybe $20 or something, and you're like, oh, big, $20. But then when I looked at the points, I'm like, oh my gosh, that's a 70-point pullback. Like, I would never hold a 70-point pullback. What was I thinking? So, and then I remember in the beginning, when you're learning, you're like, which one's more important, points or pips, points or dollars? Pips, like the points or the profit? Um, what would you guys say to that question? Let's pretend I'm like in a survey, have a whole bunch of room of traders, and it's like going down to each one of you. Which one do you feel is in the beginning, let's say your first year? Because if you think about this, there's a lot of, you got to kind of like preface it. Well, and then it's like preface it by you're just trying to hurry up and get funded, and then you'll figure out the rest after you're funded, or doing it the best way. So maybe it really wouldn't be prefaced. What do you traders think? Do you think points or profit?
Now, at first it was the dollar amount. I was just constantly focused. But then once you do the math and figure out how many pips or points will get you to a specified dollar amount that will allow you to successfully pass and utilize good risk management, then you start looking at the pips points. But at first yeah, I'll admit I was looking at the dollars.
Yeah. How about you, Miss Z?
So I think I really like that question because basically you want consistency. So I think pips are the points are what's really important because it doesn't matter even if you're going 10 points or 20 points, whatever you're doing, if you're doing it consistently, then that should help boost your confidence level with scaling up because basically you're not trying to do anything different other than, excuse me, other than as you have more capital, you're wanting to be able to, excuse me, gain more capital, not necessarily conquer more points. So I think points are what should be what's important. And I think try and focus more on that than the dollar amount, for this week. Incorporate that in my goal for the week.
Yeah, now that we've had some years into our trading, now when I trade a new trader, I'm going to definitely be training them on the points because, like you were saying, Charlotte, in the beginning, was like, understanding that market structure. Well, when in trading, now that we know that there's support and resistance, we know we know market structure. We know the way because this is I'm really talking about for scalping traders. We know that in a scalping move, we should anticipate a 3-leg move, and then it's really hit its high, and you really should be considering taking that's your scalping plan. It made its destination. But if you're cutting out early because of just the profits, you could be cutting yourself short when you could have, since you knew the regular flow, the pattern, the course that a scalp market structure should run, you would then see like, hey, I'm still at the bottom. This pyramid still has to be built. I'm only at the bottom. So you end up, cutting yourself short, getting out at the profits. But at the same time, it's funny. I can hear, Charlotte, I can hear one of our traders that we used to trade with, and he would be like, profit's profit. And so you can't go wrong when you get out in blue. I remember they would say that too. And that's true
Right.
to a point. But if you really want to be able to go long term, it's really great to be able to just know that whole pattern, that whole structure that a trade will go. And that's why for our team, on my scalping team, we have a trade where, we get out blue is blue and we're out on that trade. We've got straight profit. And then another trade, we're expecting it to run that type of course for that type of trade. So we do capitalize on blue is blue, but more importantly, we're looking for the full run. And I didn't know that in the beginning. I had not. So that's a long time, being in trading and not really getting that whole market structure understanding. Okay, so cool. So the next one is for the 8 effective strategies for scaling up after achieving funding is use fixed percentage risk. And what is that? Risk based on account size. Always risk a fixed percentage of your total account, like 1 to 2, regardless of how large your account grows. This way, your risk scales naturally with your account size. So that I think you traders would be doing. I think we're all pretty comfortable around 1 to 2. Any of you traders know any traders that are doing 5% of their account size? How many of you traders know traders that really just stick to 2% for their daily max loss? It's 2% of their account. So for the recording, and I'm not going to type on here because it would just mess up the whole flow of the PowerPoint. But let me get out my calculator. So if, let's say you had a $10,000 account times 2%, that's $200. So that means, do you traders know someone who's risking like $200 for their max loss per day every day?
Yes, I know traders that risk even 3% max
Okay.
loss. Yeah.
And how do they like that?
Well, when it's going in their favor, they love it. Of course, needless to say.
Yeah.
But these are very experienced traders, so they do it, extremely well.
Okay. Good for them. listening to a group, and they do stocks and whatnot, and they were doing 5%. But like you said, when it gets going the other way, that's a big hit on their account. And then that's where the trading psychology comes in. Okay, adjust dynamically. As you gain confidence and constant results with the new size, adjust the percentage or position size slowly. So that's very true too, because again, those profits, when you're seeing a trade and it is running the way it should be, but now your profits, you could be out of profit and you're like, man, or I'm just going to take the profits. Now you got to find your new re-entry, and you might not have the confidence to get back in than if you just held and were able to continue on. So that definitely will impact. So that's a good idea there. Okay, the next one says, let's see, we are number 2 of 8. So focus on high probability trades. Selective scaling. Only increase position sizes on trades where your edge or probability of success is the highest. For less certain trades, use smaller size. Grade your setups, A, B, or C. So that's what I was saying, grade your setups. So how many, Miss Charlotte, are you grading your setups?
No, and I know you definitely taught us that, how to do that, but no, I don't.
Okay. Yeah. If you can start identifying what your trade setups are, the ones that are most high probability, they usually really hit often.